Hey, good afternoon, everybody. We're going to go over our Forex trades for today, Thursday, March 12th. We had really just spinning wheels here today. We had 5 trades, pulled out 4 pips completely on a full-scale basis. All 5 trades were 15% of our normal size. So that comes out to about a half a pip that we were up on the 5 trades. Like I said, really spinning our wheels. They were all swing trades. It was just one of them just hit us hard, and the other 4 we did okay on. I guess we got out early on some, but whatever. We'll go over them in a minute. Let's just want to touch base on the economic numbers that came out this morning, which were the retail sales here in the States. That's obviously a big number every month. Excuse me, and it's for the retail sales for the month of February, and they came in horribly. They came in at a negative 6%, or excuse me, negative 0.6% versus what was expected to be a positive 0.3%. So negative 0.6 compared to a positive 0.3. If you take out the volatile auto industry, the retail sales came in at a negative 0.2%, and they were expected to be a positive 0.3%. So again, horrible data. We've been preaching it. We've been saying it. The economy is not what they're talking about on TV. The economy is not what the stock market is representing by any means. And we've been warning about it. This economy is not good. Again, I don't know how the Fed is going to raise rates because of a strong economy. They may decide to raise rates to normalize them, as we've said many times in other videos. They may decide to do that and just not tell everybody and say that the economy is strong, or they're just looking at things differently than many other people on Wall Street. And what we've been saying, that the chatter seems to start to be getting around lately. The stock market was down Tuesday over 300 points, finished down modestly again yesterday. Today it's up modestly, so we'll see. I believe it's down for the year. Wouldn't be surprised to see a big sell-off there. The U.S. dollar has been rallying, obviously, because they've been saying that we know QE's over, and they've been saying they're going to raise rates. But that could turn in a heartbeat. If the Fed steps back in with another QE, without ever raising rates, I think the dollar could get smacked down pretty hard again. And as we've been saying, they've painted themselves into a corner, as has Japan, and as Europe. They haven't been doing it as much because they really weren't doing QE until this week. It started Monday, right? So they're painting themselves into the same corner. So maybe it won't matter. Maybe, and now China's talking about doing more stimulus. They've done stimulus. They can talk about more stimulus. And maybe they'll start their own QE program. So I guess if the entire world paints themselves into the same corner, there's really no corner to be painted into. I mean, if that kind of makes sense. Anyway, let's go over to 5 trades real quick here. Like I said, swing trades, all 15% of our normal size. First one we had here was Australian dollar, New Zealand dollar. We were long this 1.04918. You could see it ran up. We didn't get out, and it started to pull in. So on the second rally, we wanted to be out before the interest rate decision from the Royal Bank of Australia, which was at 4 p.m. Eastern Standard Time. So obviously you want to be out before that. And you can see what happened. I mean, it could have been the complete opposite. It could have been a complete spike up. That's neither here nor there for us. We were going to be out regardless. So we had this move up. We didn't take advantage of it. And as it started to move back up, as soon as it got, somewhere it was a decent area, we took the profit, picked up 27.1 pips, up 4.1. And you can see there, we had 2 opportunities to sell it higher. The first time it ran up where we didn't, and then the second time it ran up. But again, you want to be out before this news. How much higher is it going to go? Is it going to try to take this out? All these questions are unknown, and you're staring at 27 pips in the face. You might as well take it, which is equivalent to 4.1 pips. Euro to U.S. dollar, we had 2 trades here. We had a short, 1.05873. Came in nicely. We picked up 37 pips, got out too early, as you can see there. Picked up 37 pips, size adjusted 5.5. And then we got another signal to go short again, 1.05483. Again, got out too early. But on the flip side of getting out too early, this thing has been so beaten down, the euro against the dollar, the euro against every pair, just about, especially against the dollar. The whole street knows it's heading towards parity. Here it is at 1.05. Just a matter of a few months ago, it was over 1.20, right? So it's heading to parity. When is it going to go there, or is it ever going to bounce? And do you want to be short this thing and risking a bounce in your face? If you short it, you pick up little moves, 37 pips, 14 pips. Depending on your size, adjusted for size, 5.5, 2.1, whatever. You just don't want to get caught in a big pop. This is the strongest rally it's had in 2 weeks. This move that you're looking at here in the euro US dollar. So, you have to be careful if you shorten it. It looks like it wants to come in again. Probably will, but it all depends on what if you're shorting it, if you're trading it for a swing and you're going to give it 150, 200, 250, 300 pips, fine. If you're looking for a scalp, you got to be real careful with the euros. Pound to Australian dollar is the one that hit us. We were long 1.98178. Basically a false breakout. It looked like it was taking this high out on the 30-minute chart here. Total false breakout. Never really was positive for us. Just a matter of a few pips. Again, it's a swing trade, so we're looking for a lot more than just 1 or 2 pips on a full size. On a size adjusted basis, that would basically be flat. And it just total false breakout and just reversed on us. And it took us, we got out with the loss of 14.3 pips. Again, you want to be out before the interest rate decision by the Royal Bank of Australia, which we weren't going to risk. Good thing, because we would have got beat up even more. And then the last trade was euro to Australian dollar. We were short this 1.38874. Again, you're risking a rally on this thing in your face, on any type of bounce. We picked up 20.6 pips, size adjusted 3.1. So we'll take it. We'll take that and move on. Unfortunately, after 5 trades, just up a half a pip, so didn't really get anywhere today. But that's it. So if you're still trading now, good luck. If any signals come out, they'll be coming your way, and have a great rest of your day.